where should we put our money? Well, we're joined by Andrew Lynch, who looks after nearly $2 billion as portfolio manager at Schroder Investment Management. Andy, thank you so much for coming in. In terms of this little bit of a reprieve that we're seeing today, stocks up nicely across the board, a little bit of a dead cat bounce?
I think so, in that the big fundamental challenges are still very much out there in the world economy. So we have further news flow to come today on the Euro crisis with the Constitutional Court ruling in Germany. We have still to come in the next month the Troika going back to Greece and determining whether they're in compliance with the austerity measures. So the problems haven't gone away, but we're having a nice day where we can ignore them for a bit and just feel a bit nicer about the world.
Talk to me a little bit about valuations, because there are stocks that have, of course, underperformed the markets and that look relatively cheap. What would you be buying right now?
So the first thing to say is don't try and step into these markets if you're looking for a 1 month, 2 month trade.
So it should be longer term, what, 6 months, a year?
I would say at least a year, maybe more. The volatility we're seeing at the moment means you could very easily lose money in the short term. So first thing to say, be a bit cautious. If you've got money for the long term, look for businesses that are in structural growth areas. So we've mentioned before to you oil services. As the world economy continues to grow, we're seeing more and more cars coming onto the road in places like China. Those cars need fuel, and the oil services companies are really well positioned to help the oil majors, the BPs and Shells, get that oil out of the ground and into our petrol tanks.
What about utilities? Something a little bit more defensive, which have been holding up quite nicely year to date.
They have been holding up nicely. My concern with utilities is that, particularly in developed markets, governments generally are looking for ways to raise tax money. And utilities have the great disadvantage that their assets are pretty immovable. It's hard to pick up your power station and take it home if you don't like the government's tax policy. So if I were to be sitting in a finance ministry, a very easy target over the next years will be utility companies. It'll be popular with voters because you've all seen fuel bills rise, electricity bills rise and so on. And from the government's point of view, there's not much utilities can do to minimise those tax bills.
What about retailers? And if you were to go into retails, how do you actually pick the ones that have good returns? Today we have, 3 retailers reporting: Supergroup, Dixons and Richemont, and they're all nicely more than 5-6%.
Yeah, I think for very different reasons. I mean, Richemont is obviously playing in the luxury area, and I think that is a very sustainable trend that's going to continue. Obviously, the Swiss National Bank move yesterday is great news for Richemont.
If it can be sustained.
If it can be sustained, yeah. But I think at least over the next several months, the Swiss National Bank is not going to retreat from the very firm line it's drawn, at least in the near term. Supergroup, again, a very cult, trendy brand, doing well. Dixons, they're telling us the UK economy is bad. Well, we knew that. Yeah. Actually, in Scandinavia, their likes were positive. That's good. And as Mark was saying, the fact that they're starting to have conversations with other companies. I mean, they may deny that anything's going to happen, but I'm sure
there's always some kind of speculation or rumours out there.
Exactly, and as with all these things, you deny things until they happen.
And is there anything that you would actually not touch? I know we've talked about banks in the past. It does seem that though the banks here in Europe are much healthier than the ones in the US, also because we're seeing a lot of reshuffling around for CEOs and management. Would this be a good time to come in? They've been beating quite a lot over the last 2 weeks.
I would remain cautious on the big banks in Europe just because of the huge quantities of government debt that they still have on their balance sheets. If I had to invest in financials, I would feel more comfortable maybe with some of the insurers, a non-life business where they don't have as much invested in assets. It's much more how much do you make year over year, and they've been knocked down with the banks, and that I feel is less justifiable.
All right, Andy, thank you so much. Andy Lynch there.